All right, here's what we had. First, we had an iceberg that showed up and he had 3,000 to do. Let me back this off. All right, so the iceberg appears, there's one that gets filled. This one appears right in here. We have it so it shows us when he started. We can't find out when he started until we reveal that he's an iceberg. What we can find out is how much he's showing, which is important. If he's showing 100 or more, he usually has a lot. So when the market does 1,500 of them, that's this number here. It's a big buy order that now the market realizes they're more than meets the eye. Generally, we walk away from it. If you spend time near it, we're going to go through it. All right. And you actually, when you get some longs piling in right in here, was the moment I said that, and you can see my cursor coming in. The moment I said they have a chance to go through it now. And we go through it, but you don't really get a lot of longs that like come in. You got this short that screwed it up. When I say this short, that 9.5 that came in. So it got above this green line. And I said, hey, listen, when you're watching the market, this is a pivotal price now. Above it, it's a little bullish. Below it, it's bearish. It's not me changing my mind. It's the market changing its mind. It's just me reading it. Something happens though above it. You get this big I think I put BAL, big ass long that came in, 1075, help drive it lower. All right. So now let's go fast forward a little bit. You're getting the ingredients to go lower. You're getting below this green line, and you're getting all these greens to come out, especially that one. I think it was another BAL, big ass long that came in. And so you get here, I'm even drawing it up there in real time. BAL. So that's a little bearish. Something happened after it got through there. Did you see my arrow? I said, now just wait a second. A big short came in, and you want to keep it below 10 even was where that iceberg came in, and then that short goes away. You see it go away? That was the another qualifier that will probably go down. He cleared, he got short right there. I'm going back and forth on the tracker. Bam, he goes short, or he gets short, goes away, gets short, goes away. Long comes in, where? Right there. Look at that, right there. Long comes in, over with. Well, here was the moment right in here. Short comes in, goes away, and these longs come in. And as soon as it got below those 850s, 875s, I think we said, water on the slide, and was able to dance lower. Right in here. You see the shorts come in? So it's a hold on a moment, hold on a moment, hold on a moment. Boom. Those shorts go away a little bit. Boom, these longs come in. And this big ass long right here, 875, is what you want to see if you're short. You get below it, and you generally could get water on the slide for that move lower. And then you get a balanced fight of longs and shorts. So it jumps around a little bit. There's a reason why it hesitates when you get those shorts that came in, right? Then we had a move that went up, surprising a little people, some people. You know, when you see all these shorts come in at this moment right in here, this is a moment to say, hey, that's a qualifier to cover a short. Well, let me fast forward this a second and show you guys. This chop just walking back and forth leads me to believe that as Europe closes for today, you might create a little bit of, we already found our equilibrium and some price discovery. And do we rally through 20 or break through 06? Might just be a little tougher. Today has been a very difficult. This is what I want people to understand. Not every day is a day you're going to read super well. There are other days you're going to read better than certain days. Some have read this well. I felt like after there's a few moments where there were predictable moments, but what surprised me, it's like playing and watching baseball for a long time. There's always a play you never seen before. The markets open up, they rally, they take the whole rally back, they take the whole break back, they take the whole rally back. Now they're going to take the whole break back. You don't normally see big moves like that totally get retraced and then totally get retraced and then totally get retraced. Generally, this is a good reversal and it should continue down. Generally, this is a good reversal and it should continue up. And it's just taking a big chunk of the move away. And I think that some of that has to do with some option expirations tomorrow and the June contract going off the board. And there's a little bit more open interest in that contract than normal. So it could be a little bit of that. I know we're on the other side of the mountain of the FOMC, but you could see when we rally like this, goes from green to red, is when you actually want to get more bullish halfway through this move up. It has a lot to do with shorts getting stuck right in there. So there's no coincidence. As soon as they got above this big ass short, they jumped it. Always opposite conventional wisdom. When there's shorts, you want to get long. When there's longs, you want to get shorts. You don't want the competition. You're either in the group or you're on our chart. So go back and listen and look at what I talked about with the moments of the shorts coming in but going away and the longs coming in for a move lower, with that iceberg being the pivotal moment. And then just in real time, what we're seeing here, when you got above this red, there's no coincidence it popped. When you got above this red, there's no coincidence it popped. These are big positions, big areas of position. So in our group, we're on our charts. Be safe.